On the other hand, strong numbers can boost confidence in Europe's economic recovery. These two levels may serve as short-term upside targets. These short-term holders are known to react quickly to market shifts. Welcome back to the channel. I'm Isaac Martinez, trader and market analyst at XShift. In today's weekly market update, we'll dive into the key fundamentals and technical analysis shaping the financial landscape. With rising global tensions, major shifts in monetary policy, and increasing volatility across asset classes, it's more important than ever to stay informed. We will be analyzing the dollar index, S&P500, Euro USD, and Bitcoin using professional tools to break down what the charts are really telling us. So, let's get into it. As always, we will start with the economic calendar. Don't forget that all the hours you are going to see are based on GMT-5, which is related to the New York trading session. This week economic calendar starts off quietly on Monday and Tuesday, but things pick up on Wednesday with several important updates. At 9:15 a.m., we'll get the French flash manufacturing PMI. This data gives us a quick snapshot of how the manufacturing sector in France is performing. It's useful because it tells us whether companies are growing or shrinking. Also at 9:15 a.m. we'll see the French flash services PMI. This is similar, but it focuses on services like banking, retail, and tourism. Both of these PMIs are early indicators that can move the euro, especially if results are much stronger or weaker than expected. At 9:30 a.m., Germany releases its flash manufacturing PMI and flash services PMI. Germany is the largest economy in the eurozone, so these numbers are watched closely. If we see weakness here, it could pressure the euro. On the other hand, strong numbers can boost confidence in Europe's economic recovery. Then at 3:45 p.m., we'll shift focus to the US, starting with the flash manufacturing PMI. Just like in Europe, this tells us how American manufacturers are doing this month. Right after that, we'll get the US flash services PMI. Since services make up a big part of the US economy, this number is often seen as a good overall health check for the market. On Thursday at 2:30 p.m., we'll get the weekly unemployment claims report from the US. This tells us how many people applied for unemployment benefits last week. Fewer claims usually mean a stronger job market, which can support the dollar. Higher claims might increase concerns about the economy. That's the main data to keep an eye on this week. And now shifting to the fundamentals, Wall Street analysts are starting to lose confidence as rising tariffs fuel fears of slowdown. A new Bloomberg survey reveals that forecasts for the S&P500 by the end of the year have dropped significantly. The average target now sits at 6,047, down 8% compared to last month. While that still suggests a 15% upside from current levels, it would only represent a modest 2.8% gain for the year, potentially the weakest performance since 2022. Out of 21 strategies surveyed, 13 have downgraded their forecasts. The most pessimistic came from JP Morgan's Dubravko Lakos-Buyash, who slashed his projection by 20% to 5,200. Other big names like Evercore, ISI, Bank of America, and Oppenheimer also made significant downward revisions, trimming their targets by more than 15%. Meanwhile, the market showed mixed signals on Thursday. Gains in Eli Lilly and Apple helped support the S&P500, but overall sentiment was cautious. Hopes were lifted slightly after President Trump mentioned big progress in trade talks with Japan and expressed optimism about a future deal with China, though without providing concrete details. Despite the optimism, investors trimmed positions heading into the long weekend. The S&P500 ended the session up just 0.13%, while the Nasdaq dipped by 0.13%. For the year, the S&P500 is still down more than 10%, highlighting the growing concern over tariffs, interest rates uncertainty, and global trade tensions. And while traditional market markets struggle with downgraded forecasts and rising trade tensions, the crypto world is also showing early signs of instability. Bitcoin may be headed for significant volatility as short-term holders begin moving large amounts of coins. According to on-chain data from CryptoQuant, 170,000 Bitcoin bought between 3 to 6 months ago have recently been transferred, a classic sign of upcoming market turbulence. These short-term holders are known to react quickly to market shifts, often fueling panic selling. In recent days, they've been sending nearly 930 bitcoins daily to exchanges, while long-term holders have stayed relatively calm, moving around 529 bitcoin per day. Analysts suggest this sell-off isn't a mass exodus by smart money, but rather a reaction from nervous short and mid-term investors. As Bitcoin trades sideways and volatility tightens, a sharp price move up or down could be imminent. Now we continue analyzing the most relevant assets, starting as always with the dollar index, representing the strength of the US dollar. First, let's recall that last week we anticipated a potential bullish movement aimed at generating liquidity, or more precisely, capturing liquidity at these two marked zones around 104.314 and 104.683. However, the price did not reach these liquidity levels. Instead, it directly fell, exactly as we mentioned could happen in our previous analysis. Now we can see that the dollar index has successfully reached the two bearish targets we previously established, 100.865 and 100.157. Currently, we observe that the asset is consolidating within a sideways range, which logically correlates with the minimal volatility resulting from recent economic fundamentals released this week. Switching over to the daily chart, it's important to note that the price has already captured significant liquidity at previous lows, as we can see here. Not just on the daily time frame, but also on the weekly chart, and it's located specifically around the 99.57 level. Despite this liquidity graph, the price continued dropping, indicating it hasn't yet found sufficient liquidity for a definitive rebound. Zooming in further, we identified an imbalance zone around the 99 level and extended this fair value gap area may provide valuable insights about whether the price has reacted positively from this level. Indeed, as we can observe, the price has interacted with this fair value gap and started a rebound. However, it remains unclear if this rebound is strong enough to sustain an upward move. Until we have a clear confirmation, no bottom can be confidently identified in the dollar index. Therefore, further declines are possible. For downside objectives, I'd highlight the daily support around this point, 97.69. This is a key target. The market could realistically approach this zone over the coming days or weeks, representing a crucial area for a potential significant rebound if the current support levels prove insufficient. Regarding upside targets, we should pay attention to the recent liquidity zones left behind. The first target is positioned around 99.746 and the second is slightly higher at 100.276. If the fair value gap zone previously discussed, as we can see here, can generate enough bullish momentum, these two levels may serve as short-term upside targets. From there, we would reassess the price action to determine whether the bearish trend is likely to resume. Now let's continue with the S&P500. Notice that we've reached every single bearish target we previously outlined, down to the very last one. Price indeed dropped all the way down to our final bearish target at approximately $4,845. At this level, the market reacted, bouncing upward as we can see here, and attempting to gain bullish momentum. If this bounce holds, we could form a hypothesis that a potential bottom has already been established around the 4,845 area. Moving forward, if this low remains unbroken and more importantly, if we achieve a clear breakout above these resistance zones located at $5,786, we may indeed confirm that a bottom has been established. From there, the market could aim higher, potentially heading towards new highs. However, until this bullish confirmation occurs, the bearish trend remains intact, meaning the S&P 500 could continue declining. As for this week's targets, I'd highlight several key liquidity zones to the upside. First, we have a clear liquidity high at around 5,481. Secondly, another critical liquidity area stands around 5,695. And additionally, there is a vacuum block here. And if we put a precise price, it is 5,565. Finally, the crucial high at 5,786. Personally, and remember, nothing discussed in this analysis should be considered investment advice, rather just my personal perspective. I believe the price could continue experiencing downward pressure. I urge caution regarding bullish expectations until the previously mentioned criteria are clearly met. Let's now move to the euro-dollar pair. Price has maintained a clear bullish structure characterized by upward movements, as we can see, with minor corrections along the way, consistently making higher highs and higher lows. This indicates a strong likelihood that the bullish momentum could continue, potentially pushing the price even higher. In terms of bullish targets for the Euro USD, I need to move to the daily time frame so I can see easier the next target, a potential price area around 1.149, with another key target here, as we can see, another liquidity zone at approximately 1.169. On the other hand, for potential bearish objectives or retracements, we should consider the following fair value gap zones. Here is a clear fair value gap in the 4 hours time frame located at 1.1145. This is a key liquidity area where the price could retrace. And additionally, there are two other minor fair value gaps that I see here, but as a final and significant bearish correction target, I highlight the zone at around 1.10115. These bearish targets present scenarios where the price might pull back to collect liquidity before resuming its bullish trajectory. Lastly, let's discuss Bitcoin. There's not much to highlight at the moment due to the extended sideways consolidation. As we can see here, it was almost a complete week of consolidation. Noise in price action. Personally, I'd be waiting for Bitcoin to break clearly above 88,800 zone, which is this zone here, before considering more significant moves. Currently, we're maintaining this bullish opportunity, given that price recently established a double bottom formation. This indicates the possibility of a meaningful recovery to sustain bullish momentum, increasing the likelihood of continued upward movement. Should this bullish scenario play out, we might see Bitcoin reaching toward the 88,000 area, breaking that resistance and subsequently targeting higher levels at $92,000 and $95,000. Conversely, for clear bearish objectives to consider this week, especially if you are inclined toward bearish setups, I would highlight the first downside target at $83,000, which is located at this point, and finally secondary target positioned at $78,300, and finally the last bearish target around the double bottom area previously established at approximately $74,400. Keep in mind, as I've mentioned earlier, that we already have initial criteria to anticipate potential bullish continuation. Although Bitcoin has not fully confirmed a bullish trend yet, given we haven't achieved the previously outlined bullish criteria, we could still anticipate upward momentum as long as price remains above the mentioned double bottom zone. That's it for today's market overview. If you found this analysis valuable, make sure to give the video a like, subscribe to the channel and turn on notifications so you never miss an update. And don't forget, you can start trading with XShift by registering now at xshift.com. Thank you for watching and I'll see you in the next video.